Hey folks, welcome to the Contrarian Trader. This is Bob Desmond. How did we do last week? Well, we booked profits on the last of our shorts at the beginning of last week. That was on stock symbol FRP. We traded NSR along. That was an extreme oversold stock. I believe I profiled that last week on the best stock picks video. We booked profits. Also, we booked half of our profits in UNG. That's the U.S. Natural Gas Fund. That's an investment. We're still long of the UNG. We're going to be looking to buy that position back. The reason why we booked profits is because it flashed a bearish key reversal. So we figured we'll get back in at lower prices. And sure enough, after we booked our profits, half profits, the ETF continued its pullback. We're waiting for it to settle back down. We'll probably look to add that half that we sold back in next week or the week after, as long as we see some bottoming action, and we'll look to get long once again. We have a few stocks that we're looking to trade this coming week, and I'll get to those charts in a moment. However, net, we're still bearish on this market, and I'm going to be looking to add to the short side. Why am I bearish on this market? You can go back to a video I posted on StockTwix called Stock Market Correction, posted on December the 4th. As a matter of fact, I'll post a video here. It was initially titled Midweek Market Pulse Check, and that was for members, which I had sent out on November the 25th. And it outlined the reason why I was bearish in the market going into 2014, and I actually used a 15-year chart to illustrate why I thought the markets were going to break down, at least the Russell 2000 was going to break down in January and February, because Ben Bernanke was leaving office and taper would probably be on the horizon. So appreciating the fact that the bull market was based entirely on QE, we knew that the market was probably going to correct. The markets were extremely overbought, and sure enough, we were right. Now that we're on the other side of that chart and we've now begun our decline, we want to continue to build positions. Can we continue higher into next week? Yes, I fully anticipate that we probably will. Why else am I bearish on this market beside the chart, the 15-year chart of the Russell 2000 and it being extended? Listen, folks, we have corruption in Washington like I've never seen. We're a third world banana republic. We have a president of the United States who is, when I look at him, I see a captain of a ship. However, this captain has a pump shotgun and he's blowing holes in the bottom of his own ship. So he's helping sink this economy. The Republicans, who are supposed to be the opposition party, the party of ideas, the party of fiscal austerity and fiscal conservatism, what they're doing is that they're eating their own. They're attacking the fiscal conservatives who we need so desperately. And what is the agenda, the top political agenda for the Republicans in 2014? Amnesty. So we have no leadership in Washington. If anything, they are just completely corrupt morally, corrupt fiscally, and corrupt of ideas. They're void of ideas. So it's scary. Economically, we have a Federal Reserve that is in taper mode, and taper has done nothing but hurt the economy. Yes, it's created a wealth effect where the wealthy have just gotten more wealthy. However, when it comes down to jobs, we had, in the month of December, we had a total of 75,000 new jobs created. Of those jobs, 40,000 were temporary workers. In January, the report that was released Friday, we had an expectation of 175,000 new jobs. What did we get? 113,000 new jobs. This is after $85 billion per month in new bond buying by the Federal Reserve. I mean, seriously, folks, is this the best that we could do? So why am I short this market? Just keep an eye on Washington, the inaction, the incompetence. Keep an eye on the economic data. One month you have great economic data. The next month, garbage. It's inconsistent at best. This is what happens when the government decides that it can do better in the capital markets than the entrepreneurs, than the private sector. We are in a horrible time period, and I think that what's going to take to get us out of it is a huge, huge washout in the economy, a big correction. I think there's one coming, and this is the first shoe to drop in January, February. I don't think we're done yet. Can we rally? Yes, but we'll use those as opportunities to add to our short positions. So with all that enthusiasm about the health of the U.S. economy, let's get to the charts. Okay, let's kick things off with Dollar Tree, symbol DLTR, daily chart. And folks, all of these charts I go over with members on the week ahead commentary. That's set to be released on Sunday, every Sunday. And I go into the weekly charts as well as the intraday charts looking for setups. And on the weekly and monthly charts, I look for setups from a 30 and 60,000 foot view. Daily charts sometimes really don't show you the best risk to reward entry points. And Dollar Tree has a great weekly chart, and I'll touch upon that with members on Sunday. So Dollar Tree was one of the stocks I profiled last week along with HGG and WWE, which I'll touch upon as well in this video. All of those stocks did exactly as we expected, DLTR. Two of my members traded this to the long side. Congrats. What I'm looking for is a pullback on DLTR. Look for the 50-day moving average to cross below the 200-day moving average, and that'll set us up for a good double bottom setup. I like the weekly chart, and I'll go over that with members. Volume on Friday came in lower than Thursday's action. That's not really what you want to see. That's not a sign of health. If this was a sign of accumulation, then you would see up volume rising on Friday as opposed to Thursdays. That didn't happen. This is a short squeeze. So don't go chasing DLTR. I like it on a pullback. I'll be sending out a trade alert to members when we decide to get long of DLTR. It is not a short. KOP, this is Koppers Holdings. This is an extreme oversold stock with an RSI of 16.76. I like the slow Stokes. They're setting up for a nice rally. However, keep in mind that Friday's price action shows resistance at 38.50. So the risk to reward is not in our favor just yet. And just because there's an RSI below 20, below 17, it means nothing to me. You need to use the RSI in conjunction with your price action along with your volume action. And this is only 1/3 of the way there. Yes, the RSI is bullish. However, price action is not bullish. It implies that we will see lower lows, and so does the rising down volume. This is never good. You don't want to see rising sequential down volume. You want to see these volume bars drop off. That's a sign that institutions are lightening up on their selling, and that's not happening just yet. And again, I'll go over the intraday and the weekly charts with members on the week ahead commentary. Far more informative than just daily charts. VIVO, this is Meridian Biosciences. Good daily chart, good doji star formation, recaptured support at $21 per share. I like VIVO. However, before I open up a trade, I'm going to want to take a look at the intraday charts and to make certain from a weekly perspective that I am at the best support level possible to get involved with the stock. RSI just barely makes it onto our screen, just below 19 on the RSI. So we like VIVO. A little bit more research is necessary. CBLI, I profiled this one last week on the best stock picks video. It's still there. I love the consolidation on CBLI. Volume is really quite light, remains quite light. I would like to see higher volume bars. We'll take a look at the intraday chart to see whether or not we have a good setup on our hands. I think that we might. Note the double bottom setup on the ADX line in green. So CBLI looks good. QNST. This is an extreme oversold stock with an RSI just below 19. The 50-day moving average has crossed below the 200-day moving average. Some think that's bearish. In fact, in this case, I think it's bullish because it's out of the way now. We don't have to worry about this pressure, this event weighing on the stock. It's already occurred. I don't like the topping tail on Friday. This clearly a sign of resistance at $6.80. Where was resistance last? Back here in May at $6.80, $7 per share. Avoid it. It needs to come down to our support level. And for that support level, we will look to the weekly charts. GDX, the market vectors, gold mining stocks. We like the GDX. This is a monthly chart. I'll go into the daily chart for when we want to look to add to our position on the GDX. I think that this is a very, very good opportunity to buy the GDX as an investment. So we will look to add to our position, and I'll go into this chart in greater detail with members on the week ahead commentary set to be released on Sunday. Next stock up is Groupon, daily chart. Cup with handle formation, and we're beginning to break out. So we like GRPN. However, we want to make sure that we buy in increments. The money is made on the buy. We do not just go jumping in all at once and open up a position. The stock is a show-me stock. It's got to show us that there are buyers willing to bid the shares up. How do we know that? Not just by virtue of looking at the price action. We want to look at the volume action. We don't quite see institutional buying just yet. Does that mean that there's not a trade to be had? No. There is a trade to be had. However, until we see these volume bars increase dramatically, we will not be aggressive buyers of Groupon, nor will this be on our investments portfolio. It will be a swing trade. Good double bottom setup on GRPN, on RSI. Breaking out on Williams percentage R, so I like GRPN. Hemp, symbol HEMP, is similar to the PHOTs of the world last week. It pulled back off of this extreme overbought level. Is there any big shock here? We're going to just draw a trend line up, identify a good support level to begin buying HEMP at, and if it holds that support level, we will look to add HEMP. VTMB, we are currently long of VTMB. We'll be looking to add to it. But if you're not, we were long of VTMB back here when nobody else wanted it. We identified it on a breakout of this weekly downtrend. We bought at 00.11. We now have a 6-bagger on our hands. This thing is really taken off, and it's just a little bit too late to be chasing it. We'll be looking for a better entry point to add to our position. I know that there are members out there that want to add to their positions. We'll look at the daily charts. We'll look for a good area to begin to add to our long position. But as of right now, it's too late. You need to wait for a pullback. And for those folks that are wondering what a 6-bagger is, it means that we've made 6 times our own money, or 600%. And that's as of the beginning of the year. PTOG, this is another OTC stock that I really like. This is one that it's only really appreciated on the weekly charts. The daily charts only tell half the picture. And for members, I will get to that tomorrow. I really like PTOG. Huge institutional accumulation, and the price has yet to break out. So we will probably be buyers of PTOG in the coming week. But members, stay tuned for the analysis of the weekly chart. And that's it, folks. If you have any questions, shoot me an email. If you're watching this on YouTube, subscribe to my channel. If you're watching this on my homepage, please enter your email address. Get my best stock picks videos delivered to your email each weekend. Also, you'll get my trade reviews of stocks that we've closed out. I'm behind on those videos, and there's going to be a whole bunch of them coming out real soon. And also get some free trade tutorials. So you will not be spammed. I hate spam too. You will not be spammed. And that's it, folks. I'll talk to you soon. Have a great remainder of your weekend. Enjoy the Olympics. Go USA.